Thursday, February 13th, market analysis, Stan Ehrlich. Good morning. 9:53 California time. I start out with the stock market indexes, E-mini, of course, and go to the other indexes, covering the market movement in general, overall, and then go to the major futures contracts, 20 plus of them, and sometimes other topics like cycles or, well, whatever. Now, as you guys know, I've been trying to justify and haven't been proved right or wrong really so far. The market topping out. There's a possible double top. First top was in basically early December. The second high was definitely January 24th. We haven't gotten above that. We haven't closed above that. And that's what I don't want, the high of January 24th. I don't even want to get close. And here we are at the moment, almost at the highest closing price for the last 3 weeks, approximately. Well, since January 27th. I expect to see, I'm thinking we're going to see it start to drop down. 60.13 was the first important new low, then breaking below 59.33. And the downside breakout on the double top doesn't even happen until 58.11. Below 58.11, if we get there, my downside objective is going to be 54.46, give or take a little. These are not exact prices. They're pretty close. There's no real sense in coming up with a projection of an exact tick. I mean, as long as you get super close, you're right. Or, past your objective. So we're at the price levels, which I'm expecting, and I'm going to go to a 1 minute chart here, that the E-mini has already a little tiny weeny double top here at 7:45 a.m. and 8:50, over half an hour, 8:15 in the morning, California time. A little tiny top, has a low between the two highs, of course, already broke out and already went down as much as it should have for that little tiny half-hour formation. Very, very small, but it worked. Now, is that going to cause more weakness? It's the domino theory. Oftentimes, very small formations cause enough of a movement to kick off some other breakout on a little bit larger, longer term formation, and again until you get, well, maybe even a bear market for months and months, or the vice versa. But I've seen these kinds of combinations a lot over 53 years. All right, so we're coming down a little bit at the moment. Nice, but boy, do I need a lot more than that. And I will talk about the upside. If we do start to close above 61.24 and a half, it's going to make me very, very nervous and make me start to reconsider my bearish expectations. It's got to stay there on a closing basis. If I get there and all of a sudden it falls back down again, that's actually more fuel for the bearish side, not the bull. And of course, the next high is important, 61.48-ish, and basically the ultimate. If we start closing above 61.64, I hope I have changed my mind before that even happens. But for right now, I got to look at the picture. Looks like it's topping out since the August lows. Double top formation, very early stages. Unusual that it has gone sideways so long after the second high. I don't like that. It just is frustrating. We'll see what happens. And that's the 1 minute. Now, the spider is the same thing. I'm not going to belabor this. It's just simply different numbers. Same chart for all practical purposes. I don't need to go into the detail at the moment. I will if everything starts to develop into something I can hang my hat on more accurately. And the 1 minute S&P. QQQ. Basically the same story, but the Qs this morning have made a minor new high. Since the old high, December 16th, 2 months ago. It didn't stay there. It got just a little bit above these two highs, January 22 and 24, and pulled back a little. that could be the beginning of a more of a pullback and a bull trap, a washout of buy stops. All those phrases apply at the moment. If it stays here, I'm still between a rock and a hard spot. Resistance essentially stopped it. It just didn't go down. It just slipped a little. So I really need to see this thing start to come down, or I'm going to have to flip and go to a bullish story, which is, what I should do, and I will. QQQ, 1 minute. And here we have the NASDAQ. It also attempted to, but not quite, make the highs higher today than back on January 22 and 24. Didn't do it, but it came super close. Now, none of these are overbought on the daily data chart, so I don't have that to work with. If they were overbought, I'd be a little bit more aggressive about my bearish commentary, but I can't be because they didn't get overbought. All right, so here we are on the verge of doing something significant, either up or down. I vote for down. I don't like really anymore, and that's a bothersome situation. This head and shoulder top, I am going to erase from the screen. It didn't break out. It's gone too much sideways. It's gone up too much, and I just don't see any relevance behind what I was hoping would end up being a good head and shoulder pattern. Now, this measuring stick right there is still probably good, but I'm going to erase it because it's relative to the neckline. And if we start going down, I'll do something else. I'll draw another downside objective, probably based on these two lows and the highest high between them, and then go down to, I don't know, something around this ballpark, 19,500 level. Next, the 1 minute. It could have rolled over. We're coming down at the moment, but it's all too fine-tuned to be particularly aggressively sure about. Next, the YM does have a bearish engulfing sell signal a couple of weeks ago. It is not close to making any new highs. It is not particularly close either to making any other new lows in the last couple of weeks. It's smack in the middle. So decide, will you stop making a pennant formation and make a decision as to whether you're going to go up or down or not. So that's where I am. I got to wait. And this is just simply the 1 minute chart on the YM. Looks like it's getting a little weaker, a little faster than the others. Okay, interesting. And what about the Russell? Totally different story, different animal. Major resistance and minor resistance stopped this last rally, starting at January 22, 22. Stopped. A couple of days later, stopped. A few days later, stopped. A few days later, stopped, all around the same prices. And here we are starting to slip. We're almost lower on the day, not quite near the low of today so far. And I'm looking for it to test the support area again in the red zone, coming down to 21.97 and so on. This is one of the more bearish looking indexes that I follow. And here's the 1 minute. Okay, bonds. Yesterday, I commented about the fact that it came down to the neckline of the head and shoulder bottom. Now, we already saw a couple of tests just after the initial upside breakout on January 27. This is the next day it tested the line, the next day it tested the line, the next 2 days later it tested the line, 2 days later it did it again. It's unusual for it to do it 4 times in 6 days, but none of the rules were broken. It just took a little while longer for it to finally shoot up, get overbought. And then I got a bearish signal that I really didn't want, but there it is. And it came down 1, 2, 3 days yesterday, touched the neckline, and is now bouncing rather aggressively, 42 ticks up, and getting relatively close to yesterday's high. Was that the test of the neckline that usually happens several days after the initial breakout? Well, it sure as heck looks like it at the moment. So if you continue to talk about the head and shoulder pattern, the only way you can go is sideways to up, and it ain't going to go sideways for very long. So up, that means it should challenge this recent high of 117 and break it and go up to the next resistance levels above that. plus the minimum upside objective on the head and shoulder bottom, which is relatively small, it's not big, is a level of 117.5, and it never quite got there. It got pretty close to 117.02 with the bearish engulfing day, but I think it's going to go back up and make new highs. So I'm bullish on interest rate futures, bonds in particular. Notes dropped the head and shoulder pattern, dropped way below the neckline yesterday in particular, and that totally screws the pattern. So I eliminated the arch marks and the annotations to draw the pattern, and we're basically back to a test of support, and it's bouncing off of it pretty good. So I'm friendly because of the long-term support area and the long-term patterns. Oh, and I forgot to mention, the bonds and the notes have a huge potential 1.5-year double bottom brewing. Now, this is not particularly close back on January 14th, which I got a bullish engulfing buy signal on the damn low of the market to the exact day for a year. And so far, it's a low day on the way up. You can't get better than picking the turning points to the exact day. Yes, you can. You can do it to the exact tick. Anyway, and by the way, the next day, talking about the exact tick, we bought the bonds at 110.30, and the date was January 15th, I believe. And you go check for yourself. That was the exact low tick on the opening. Now, the broad double bottom looks okay, not very flat. There's slight differences, but the time of a year and a half makes up for that. They're not that close together in price like a month or two or three. It's a year and a half. It was October of 23. So you've got all the way to October 24 plus November, December, January, February, 4 months, a year and 4 months, almost a year and a half. And the double bottom in the notes is also the similar time frame, but the prices are a lot closer, a lot closer. So this could be a very good looking double bottom, but we got to start moving up. We got to start getting above 110.05 for the notes. Next, crude. Minor new low for the dip down in a very broad trading range for a very long period of time. It could work its way a little bit lower. I think I said the same thing yesterday. I'm not particularly bearish. We're not at oversold conditions, but we were a few days ago on that last break. And when we came down this morning and tested those previous lows, yeah, I know it made new lows by a few ticks, but it didn't stay there. It popped up like a ping pong ball being pushed underwater and let go. Boing, right back again. And we're back up to almost unchanged. I think it's trying to bottom out momentarily and have a little bit of a rally. That's about the best I can say. Longer term, friendly. Next, heating oil, almost the same commentary. Support looks like it's trying to hold. Didn't get tested very accurately, but we're climbing back to the high of the day, probably making new highs for the day so far, and almost back to unchanged. And if it keeps going, it'll be a little higher on the day. I think maybe it's trying to turn up. Looks like it to me. I'm not going to be surprised if we get above 2.5 in a day or two or three. And I'm modestly friendly, intermediate to longer term. Short term, I think it may have hit a low, like crude. Next, natural gas is a bit different. It's already come up substantially for 2 or 3 weeks, and it got overbought today for the first time. That high today is almost to the tick. I wonder if it is actually to the tick. Today's high is 3,786, and this high is 3,790. So 8,690. We're 4 ticks short of the exact previous rally high, which happened on January 13th. That is a very accurate possible double top. Maybe. The breakout would take place under 2.988, and you would have a downside objective if this all happened, down to approximately, and I'm not going to measure it right now, yeah, I don't know, 2.2, 2.3. Yeah, that seems to work. But again, we got to start slipping. Right now, only overbought at resistance, and a minor correction could happen, no breakout, and up we go again. What's the overall trend? The trend is your friend, and it's up. We had head and shoulder patterns that worked right here back in October, November. As a matter of fact, it got up to the objective, overbought, and then came right back down again. Didn't take long, 4 days. But that pattern was part of a bigger pattern that has an upside objective that we have not reached yet, and that is 3.9 and a half, 3.946. Again, give or take a few ticks, 3.95. Oh. So I'm voting for a little tiny downside correction over a few days and then new highs to get to the upside objective on the larger head and shoulder bottom, which started August 28th. Lowest low, bottom of the formation, a bullish engulfing also on the very bottom and on the first shoulder low as well. Boy, almost picked all three turning points on the head and shoulder, but we don't have one in the last shoulder. And it was, approximately December 4th through the middle of December 17th. And then up. Broke out, tested the neckline a little bit, not really, yeah, very accurately. I'm getting confused by some of these lines. Anyway, I like what I see, but again, short-term overbought. Next, overbought like crazy on gold. It won't quit, and it's going up again today. These overbought conditions on daily data charts are warnings. You don't do anything about it right away. If you see yellow, it's either going to be oversold if you're going down, of course, or you're overbought if you've been going up. And it says we should probably, it's likely, top out relatively soon. But this is 2 weeks. That's not relatively soon. When I say that, talking about daily data charts, I talk about the next day or two or three, and then turning, if not quicker than that. So I'm waiting for a sell signal or for some indication that it's actually going to roll over. But I'm telling you, it could happen, should happen, probably will happen very soon. And I know I've been saying that for a week or two, but I'm not doing anything about it yet. I'm watching it go up. If you're long, I would be raising my protective sell stops quite a bit, quite quickly, quite frequently, and maybe looking to go short. If you're short, well, I'm sorry, you got short too early. Next, silver. Resistance is stopping the rally. We're going into a sideways range. This could develop into some kind of a big top. I don't know yet. Too early to say. I'm going to be kind of neutral, I'm afraid, on silver. What about platinum? Made a new high for the move on a sharp rally today. Got overbought again today. This is not bullish. This is dropping down to under yesterday's closing price, currently lower by a little bit, not much. But having hit all the buy stops and then not holding that price range, that's pretty bearish if you ask me. The lower it goes, the more bearish it starts to get, in my opinion. So far, this is not bullish. I have to say it that way. If we rally some by the end of the day and close strong, that's a different story. But right now, I'd be looking to get out of longs. I'd be looking to go short. I think we may have a sell signal of some sort or another today. Not one of my ER sell signals. The last two of those, unfortunately, didn't work. That one worked great back on October 30th. That one worked great. Major tops, May 20th. I thought this one could be the same on February 3rd this year, just a couple of weeks ago. It didn't. Here we are. Still, maybe, I think, topping out. Next, high-grade copper. I'm sorry, I got to say the same thing. Overbought for 6 days in a row now. Up near important previous highs, not quite there, but very close. Overbought very substantially so in the last couple of days, up almost to 90. I think it's about to roll over and come down very quickly, very sharply, any day now. Don't jump the gun. Wait for some sort of definitive signal. Next, and it may not be my signals. Maybe you got your own stuff. Soybeans. It makes some new lows yesterday, and the minor new lows today are the same low. but we're still hovering around a little bit of a dip here for a couple of weeks. The bigger picture is the possible double bottom with the first group of bottoms in late August, middle to late August, and a bullish engulfing ER buy signal on August 23rd, 26 to be exact. That worked really great. That little bearish one worked for a couple of days, so-so. That bearish one worked for a couple of days, so-so, is okay. And those are the latest ones. The big picture is the double bottom, last August to December 19th, a month ago, two months ago. We were within 2 cents of having a major upside breakout and stalled out just a few days ago, February 5th. So a little correction we've got. I mentioned the possibility. I don't have any worries about this. I think maybe it'll slip back down a little bit more. 1007 looks like a ballpark. There's another number, 1015-ish here. I would accept something around 1,000, 10,000. Yeah, I'm sorry, 1,000. But not much below that. That should be the most I would see this little correction having accomplished if it can get there in the first place, and then up. So I am friendly, and I'm looking for an upturn. I can accept a little bit more decline. Soybean oil, I got to say the same thing. Large bottom formation potentially brewing from May of last year until approximately December of last year. That's pretty big head and shoulder bottom. Neckline slightly upward slanted. We've got a long way to go before we break out. This is rallying nicely today, and it looks like it could be the second highest closing price maybe since it got up here. That's looking good. What about soybean meal? It's looking close to oversold, ready to turn back up, but it's sitting right at the bottom of the support area. Wow. Oil's going up at the expense of meal going down a bit. This is about as low as I can go on soybean meal. Maybe another move down to the bottom, 285, and that's only 7 cents away. So I think it's about to turn up. I don't have oversold. I don't have a lot to go on. It's just a major historical support level. We'll see what happens. Corn did work great. Head and shoulder bottom, upside breakout in earnest. There was a false breakout right there for about a day. Earnest breakout, the real one, past tense, of course, 1226, but I said so on the day it happened. Sell signal didn't work, didn't want it to work. Too close to the neckline. Came down a little anyway, but not much. The signal didn't work. Sideways pennant, jumped into new high grounds, went through, took it a few days, the resistance, got to the next resistance area, and got to the minimum upside objective on the head and shoulder bottom formation. And so here we are between a little rock and a hard spot for a short period of time. Trend is your friend, up. Can expect new highs for the trend, looking for higher levels. So that's it for everything but wheat. I had a sell signal 2 days ago. It worked yesterday nicely. Today, coming back a little. I have my doubts. I hope we get a little more of a break, but not much. I'm trying to justify a very big longer-term bottom in wheat also. But it needs to get up above, I'm going to say 592, and definitely above 636 in order to have a breakout of this double bottom formation. That would be the breakout right there. Then your upside objective would be around 738. But you got to start to do it. Next, cattle. A little bit of a dip. Looks like we may have had a minor bullish engulfing here. The low yesterday was 95.075, and today's low is 95.025, 2 ticks below yesterday's low. We have a higher than yesterday's high. Current quote is higher on the day. This is a bullish engulfing. It says it's supposed to cause prices to work higher. It is not an ER buy signal. It would have been if we had gotten down to oversold. I'm missing that criteria. So I'm thinking it's turning because of the engulfing, and I'm now looking for another move up as of now. I probably didn't say the same thing at all yesterday, but we didn't have a bullish engulfing yesterday. And, you know, come halfway back up at least, maybe go all the way back up and make a new high. I'm not super convinced it's turning up, but this is the kind of thing that I would look for. I didn't get all of my favorite criteria developing at the same time. And here we've got hogs. We did get up to resistance. I said very, very close yesterday. I also called this an exhaustion gap on the upside yesterday, possible. It did not make any new highs this morning. It did start to come down. We did get lower than yesterday's lows. It is currently trading significantly lower, down 0.55, and it closed only half of yesterday's up gap, I think upside exhaustion gap. So the next move is pretty much down. No sideways, I hope. Close the gap completely, but that's such a minor move. Probably down into the 89.5 ballpark. Next, XYZ, the only stock I'm following, got oversold yesterday, rallying today, looking good, like what I see. And now we'll check up on the E-mini again. Looks like it's dipped a little bit. Well, that would be nice. Oh, good, good. This is a 1-minute chart, remember. It just broke some minor support and coming down. Well, I got to see a lot more of that, and I want to really see it do a lot more of that. You guys have a great day and profitable trading for you. Profitable trading to you.